Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of October 28 to November 1, 2024. Let's dive into what to expect in the upcoming week. This week unfolds amid a complex backdrop of economic indicators and central bank decisions, as investors brace for critical insights that could shape monetary policy. The latest inflation data, particularly the core PCE index, presents a mixed picture for the Federal Reserve, offering little clarity on the path ahead. Meanwhile, the anticipated non-farm payrolls report may signal a cooling labor market, while the Bank of Japan is expected to maintain its current stance as inflation stabilizes. Adding to the uncertainty, the euro faces mounting pressure as Eurozone GDP and CPI data loom, potentially impacting the currency's outlook in the midst of economic headwinds. The latest inflation data shows a mixed picture, with the core PC price index closely watched by the Federal Reserve rising to 2.7% Y/Y in August, while headline PCEs to 2.2%. Expectations are for similar or slightly lower readings in September, offering little in terms of new direction for Fed policy. However, additional data on personal income and consumption, along with October's challenger layoffs and quarterly employment costs, could offer further insight into the economic outlook, giving policymakers a more comprehensive view as they monitor inflation trends. The October non-farm payrolls report, expected on Friday, is forecast to show a slowdown in job growth with 140,000 new positions added, down from September's 254,000. Despite the projected drop, the unemployment rate is anticipated to hold steady at 4.1%, and average hourly earnings may slightly decrease from 0.4% to 0.3%/m, signaling a cooling but stable labor market. Additionally, the ISM manufacturing PMI is expected to edge up from 47.2 to 47.6 in October. Given the Fed's growing focus on the labor market over inflation, weaker than expected job data could prompt a shift towards a more dovish policy stance. In 2024, the Bank of Japan made strides toward normalizing monetary policy, scrapping its yield curve control, reducing bond purchases, and twice raising borrowing costs, effectively ending its negative rate stance. While policymakers had signaled further rate hikes, inflation has steadied around the BOJ's 2% target, diminishing urgency for additional tightening. Governor Ueda and board members have recently hinted that a rate hike is unlikely in October. The central bank's decision this week is expected to maintain current rates, as officials monitor inflation trends before committing to further adjustments. The euro recently hit a 16-week low against the dollar, dipping below $1.08 as bearish sentiment continues. This week, flash estimates for Eurozone GDP and CPI could add further pressure. GDP data due on Wednesday is projected to show minimal growth of 0.2% in Q3, while Thursday's flash CPI is expected to slightly increase to 1.9% Y/Y, up from 1.7%. While the European Central Bank anticipates a moderate inflation rise ahead, the data may not provide much optimism for euro bulls, as ongoing economic headwinds dampen the currency's outlook. This week has highlighted pivotal economic developments that are likely to influence global markets. From inflation metrics guiding the Fed's policy decisions to the Bank of Japan's cautious approach amid steady inflation, the landscape remains intricate. As Eurozone GDP and CPI figures approach, the euro struggles against the dollar reflect broader economic challenges. Staying informed on these key indicators will be essential for understanding their impact on markets and investor sentiment in the weeks ahead. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.